It might be. I remember my first day in the markets was the 1987 crash, and no one can still tell me why everything crashed. 50 years later, still no one knows why. So typically, big events, drawdowns come from lots of small things happening at the same time. And normally, the Bitcoin cycle follows the business cycle to some extent. If there's not enough money to go into...
Hi everybody. We're all striving to do more with our lives, to achieve success and to provide for our families. To you, that might mean investing for your retirement or building your kids' education fund. For me personally, one of the most important apps I've been using since 2019 to grow my wealth is an app called Stashaway. Now, Stashaway is a digital investing app where you can grow your cash, invest in a globally diversified portfolio, or even build your own portfolio from over 70 low-cost, expert-picked ETFs in every asset class. So forget expensive unit trusts, forget investment-linked plans on your insurance policy, and please, whatever you do, never ever gamble, because whether it's on stocks or crypto or anything that sounds too good to be true is probably too good to be true. Because I've always said investing is a time game, so maybe you can consider doing so with Stashaway. And Stashaway is licensed by the Securities Commission Malaysia, which means peace of mind and consumer protection. Ian, thank you for doing this, and thank you for joining me all the way from Brisbane in Australia. I understand you cover the crypto market from that part of the world. Obviously, it's a great part of the world to be in. But your background is in traditional finance, equities, that kind of stuff. And now you are almost fully transitioned in terms of maybe mindset, in terms of the crypto market being where the next, growth spurt of where asset prices might be going in the future. And we're going to be talking about that transition for this session today. But before we start, maybe just pass it back to you and give us a bit of a breakdown as to, your whys and your wherefores.
Sure, thank you. So I was born in London, and I was lucky to be alive in 1985 when Margaret Thatcher deregulated the London markets and brought in a wave of US capital to create jobs for everyone for a long, long time. And so I was a market maker in currencies, actually, rather than equities. So I bought and sold them on behalf of a bank or many banks during my career. So I made the price. I didn't take the price. I'm the one that made it. So I would turn over billions of dollars every day, but I'm not there to make money with a big move. I'm there to make lots of little bits of money during the day by maintaining my bid offer spread. After that, I worked as a head of a prop trading desk, taking bigger risk. Met my wife at the bank in England, came to retire in Australia in 2001. Subsequently had 6 Australian children, so I had to unretire myself pretty quickly. But I've been here looking at financial markets, trading my own book. GFC decided that there's a big event coming up soon, which is just about now, which we'll talk about later. And early investor in Bitcoin. And as you said, there's a big change with that coming very soon as well. And the two are interlinked. So thanks for having me.
And thank you on behalf of the Australian government for adding to their population. Ian, so you used to trade fiat, and well, a lot of people might not realize, but currencies became fiat in the early 70s when Nixon took the US dollar off the gold standard. And ever since then, it's become paper, and it's become in some sense worthless in the bad sense of the word. When did your crypto kind of like epiphany happen? How did it happen?
So it happened in 2016. As I met some young people who were trading it with no idea what they were doing, but they seemed to be making money. And they said, "Oh, you OG, you used to do this stuff, you should be telling us what to do." So I got interested in learning about it. And then I realized that it was Bitcoin anyway, was created in the aftermath of the GFC for the very reason that you've just mentioned, in that governments were printing money hand over fist to support a system that couldn't be supported. And that's where Bitcoin became the alternative. Obviously, since 1971, governments have been printing money, but only very slowly. That's part of the banking system, and that commercial banks can loan money into existence, create it. But of course, the great thing about that is that banks aren't stupid enough to give it to people that are not going to give it back. Only governments do that. And the GFC obviously bailing out banks. Lots of governments gave out lots of money for free. And it went completely bonkers during COVID, and is now out of control near the end game.
So obviously, those people who know and understand Bitcoin know and understand Bitcoin, the rest of the world. And it seems as if it's the majority of the people in the world who have yet to fully grasp the full characteristics of Bitcoin. And some people say it's like a pristine asset, it's finite in nature, has got a lot of elements which people don't quite understand in terms of whether it's a currency or an asset or a commodity and what have you. And it also seems right now that its uptake seems to be institutionalized and sovereign in complexion rather than the retailers. When you look at the Bitcoin crypto market, and I use those words interchangeably too loosely, in fact, right? What are the data points that you look at, and how do you come to your understanding of where we are in the current rally?
It starts off with looking at the monetary theory within the Bitcoin code, i.e. that the rewards change every 4 years, cycle. And as it becomes more mature and more adoption, that cycle becomes kind of irrelevant or less relevant, shall we say. But really, the data points really are around government, because the Biden administration didn't want to know actively seeking to debank crypto entrepreneurs. And so as Trump came in and realized that one of his last saviors for the system could be Bitcoin, everything changed. So hence the institutions coming in now, because the United States government is fully encouraging it. Obviously, there's a lot of talk and not a lot of action. Banks have only just been able to help customers hold Bitcoin and other cryptocurrencies when the FDIC had the rules changed a few months ago. So it's really, really new. Jamie Dimon was talking about it at the weekend. So yes, it is institutionalized. And yes, there appear to be very few searches for Bitcoin at its all-time high. But that's kind of the nature of markets, in that retail rushes in at the top. So that probably tells us we're not at the top. And institutions are able to get involved if they want to, when the rules of how they operate allow them to. So we're at the stage where they're kind of not in really yet, but are beginning to be allowed to be.
So where do you think we are in the current rally? Some might suggest that we are at the tail end of the rally, but this is when it might get a bit more parabolic than in the past. And I think more pertinently as well, for people who have gotten in, early curve or mid curve or before the mid curve, what are the signs for people to perhaps be selling or taking some profit?
So typically the 4-year cycle would come to fruition, or the blow off top, as everyone expects, sometime between now and September, October. Whether that comes off or not can depend on many things. Typically, the parabolic top is where the price can't support itself anymore. And you see lots and lots of trading, the market just going up and down all the time, which we're not seeing at the moment. That is typical of retail investors chasing it up, chasing it down. Currently, we're seeing it in very distinct steps, which is more around more seasoned investors, or maybe institutions, or even, like you say, maybe even countries getting involved. They'll wait for the level to get involved rather than rushing in. So at the moment, we're not seeing that real ebb and flow that marks the end of a typical parabolic move.
So where do you think we are in the current rally? Well, dare I say it, do you have a price forecast for Bitcoin?
No, I don't. I never use price forecasts, but time is always the determinant of where we are. So I would suspect it could be twice what the price is now at some stage before October. Anyone that says they picked the top is a liar. Anyone that says that buy the bottom is a liar. In 20 years of trading, I only sold the bottom and bought the top many times. No one ever does it the right way around. You'll see from the price action, it will be really clear when it's finished, because it will be so volatile. Currently, it's actually less volatile than the S&P 500. Amazingly.
So I'm assuming, having come out of retirement in the early 2000s, Ian, that Suberia Capital advises investors, and you've got a reasonable client list of whom you advise on asset allocations and what have you, including crypto. What are you telling your clients in terms of the possibility of their potentially having an 85% drawdown as it has historically? Or do you think those days are gone, where the 4-year cycle has kind of like flattened out because it's a much more mature asset now with the bigger institutions and sovereigns involved?
So what I'm actually telling people across all assets is that there's only 2 things really that you should be investing in for monetary gain, which is gold and Bitcoin. I currently myself hold 50% in each, and they will go up differently, i.e. not at the same time, because they're there for different reasons. You could own some silver, which is a good speculative play. But in terms of Bitcoin, it's really a matter of trying to take some money off the table near the top and understanding that typically the Bitcoin cycle and the lows are a long, hard grind, and that taking at least 50% off the table when you see a significant profit makes life a lot easier.
So you are of the view that the historical patterns of that massive drawdown will still be a thing of the future and a reality, yeah? Because some people are suggesting that kind of drawdown, to the extent of which, might be a thing of the past because it's a much more mature asset now.
It might be. I remember my first day in the markets was the 1987 crash, and no one can still tell me why everything crashed. I think it was the Dow Jones was down 22% in a day. And 50 years later, still no one knows why. So typically big events, drawdowns come from lots of small things happening at the same time. And normally the Bitcoin cycle follows the business cycle to some extent, in that if there's not enough money to go into things that are easy to invest in, i.e. loose capital goes in, like shares, then obviously Bitcoin's going to go down a lot more because it's less liquid. Sure, it will be probably not 85%. It could be 50%. But I think that the main thing with it is that it goes down for a long time. You know, you have the year of death and then a year of it sitting around doing nothing. And then spring arrives and it goes up a little bit and fools you into thinking it's going up. So there's a long time to wait out between the next cycle.
So your allocation into the two types of gold, one traditional and one digital, is interesting. Gold is somewhere around about $22 trillion in complete total market value right now. Bitcoin is somewhere around a tenth of that. Some people might suggest that equation might flip in the future. What do you think about that?
Yeah, I think that's right. I think it is actually intended to be digital gold. What we know about gold is that since us human beings can remember, it stays exactly the same even if you leave it in seawater. So that's a great value. Does Bitcoin do the same? I don't think we can honestly say that is true yet. And lots of fears of supercomputing and all that sort of stuff. But currently gold I think it's the best performing asset this year and last year, simply because like Bitcoin, it is measuring the smash up that's coming in the legacy financial system.
So at the start of the podcast, I mentioned Stashaway. Well, one thing I absolutely love about Stashaway is how they help folks grow their spare cash. Stashaway Simple helps you grow your idle cash that earns nearly nothing in your bank account. Hence, Stashaway Simple is perfect if A, you're looking to grow an emergency fund, and B, if you want to keep your cash growing but in an ultra low risk portfolio which is not affected by market volatility. Here's the exciting part. Right now, new clients earn a projected 6% annual return on their cash for 2 months. No lock-ins, no fuss. All it takes is a 5,000 ringgit deposit to qualify, and it's limited to the first 1,000 eligible clients. It's the kind of offer that's hard to ignore. Stashaway is licensed by the Securities Commission of Malaysia, which means peace of mind and consumer protection. The other thing that I'd like to ask you about, when you look at the whole crypto market, is Bitcoin the only thing you look at, or do you look at other, tokens as well?
Yeah,
How do you look at that whole sector?
Yeah, I have looked at lots of tokens, and there's no doubt that it's really interesting that tokenization of real world assets is going to be a massive game changer. Just think of houses going on the blockchain, sales and rents and everything, and stock purchases and sales, and all of that stuff is just going to make things incredibly more efficient, but obviously put a lot of people out of jobs. But those utility of those tokens is to be an affordable way of doing that transaction. So when you have a token that can issue as many coins as it wants to, it's because it's there to load balance the price. If it's, XRP, and the purpose is to refuel your Tesla with electricity, then it can't be $10,000 a coin. It needs to be $1 a coin or $0.50 a coin or 25 cents. So it can be used as a low value transaction. So I think there's lots of different use cases for lots of different cryptos. And of course, 200,000 ones that don't actually appear to do anything and have got significant market cap. So,
Well, the tokenization of real world assets is definitely one to watch for the future. A lot of us are waiting for the day when we can actually trade stocks 24/7, 365 that you can crypto today, which you can't, of course, because we've got to wait for the trading days and trading hours. If you were to try and participate in that particular market development, which assets or which sectors would you look at?
I think the tokenization of real estate is the most interesting. Currently, I mean, you can use a Robinhood or Revolut apps, and you can trade a paper version of stocks, a tenth of a stock or whatever it is, and it's a really good service. It doesn't leave you in any stocks when Revolut goes bust, but depends what you're doing with it, and you wouldn't put your life savings in it. So there is some tokenization already of a form. It's more like of a derivative. But when you think that you can own fractions of a house, call it bricks of a house if you like, and tokenizations of real world assets, I think it makes lots of people's lives a lot easier in that rather than saving up for one house and getting that one house eventually and living in it, they can effectively own it, from day one, building position till day, whatever it is, when they can actually buy the other people out or whatever it is. Equally, you might have streaming rentals and stuff like that. So there's lots of different things that will disrupt the really turgid markets, which is real estate, which is, it's a liquid asset basically.
Yeah, but then, I mean, obviously, in practical terms, what do you buy? Do you buy the layer ones? Do you buy the underlying asset itself in equity terms? Do you buy, as you say, the contract for difference equivalent on Robinhood? How'd you get in? I mean, obviously, the real alpha is to be gained by getting in hard and getting in early, right?
Yeah, I think it's really important that you adopt a portfolio management approach with crypto in that obviously some are going to zero, quite a lot are going to zero. But what are the ones that are even involved in something that has real value in due course? So anything involved in real world assets is in the right game. Meme coins is probably something that's going to do well, but will be a phase. And other ones that are utility coins that simply perform transactions, they're great, but there isn't really any value in it. So it's really working out what are the game changers that the technology enables and being around that space and having a portfolio view.
I saw something of interest on the news the other day, and I thought I'd ask you what you thought. I think it was one of your Australian portals that ran a story that the biggest adopters or the biggest segment of Bitcoin ownership in Australia are actually people that belong to my parents' age group. Loosely termed, somewhat derogatorily, as the boomers, right? And
Yep.
that's strange because they are typically quite stolid in terms of their risk approach. I'm sure you saw that. What do you think about that?
I thought it was really interesting. I mean, we have been an early adopter of crypto compared to Europe, but we haven't really done anything further than that. So we don't have many crypto companies here because the framework doesn't really support it. But there's lots of high net worth Australians who typically own property, and that's all they do. They don't really own shares because they get pushed into buying very traditional ones in Australia. And so they have decided absolutely to go for cryptocurrencies. And I get calls day in, day out by people saying, should we buy it? Should we buy it? And definitely, that article is definitely right.
And then what do you tell them when they ask you should they buy it?
Usual thing, can you afford to do it? Why are you doing it? Go and have a look at Bitcoin. If you don't like that, tell me something else you want to do with it. But really, why are you doing it? Anybody that has 5% of their money in Bitcoin, I think, has got a really good position. I've got a lot more because I know it. Do you want if you're going to own meme coins, then you're going to have to be pretty alert and pretty swift on it. Because they're not going to go for a 20-year ride going higher like Bitcoin. So it depends who they are and what they. But I mean, I actually hate getting asked that question because you can never win.
If you do, damn if you don't, right?
That's it.
Interesting that you should use earlier that analogy about buying bits and pieces of real estate because it's exactly the same kind of analogy that Michael Saylor of MicroStrategy talks about when he refers to Bitcoin, about how it's, in a way, it's a little bit like buying real estate in New York, 200 years ago. And it's a bit of a land grab from where he thinks, right? And he's got a price target of something like, I don't know, 10 million or $11 million per Bitcoin, which seems crazy. It seems insane. But I'm interested to see what you think. Do you think that holds any water?
I was saying to someone the other day on a podcast, can you believe that when we invested in 2016, when the authorities hated it, were trying to bust it, were telling everyone it was always used for drugs and stuff like this, can you believe that here we are not very much later, it's over $100,000. Countries and institutions and banks are being encouraged to adopt it. I can't even believe it myself now. So why at 10,000 was it more? Was it unbelievable? Is that not the same case now? At 100,000, can we not go to 1 million? We probably can. I think it takes a lot more capital than people think to get it to 1 million, because it has got to compete with gold, for example. And the reality is that it's not going to go to $20 trillion market cap like gold. You'll probably find that they both end up with $10 trillion or something. So there's only a certain market for that sort of activity, which is probably more than the sum, but it doesn't mean to say that Bitcoin is going to go to $20 trillion, which would be about 1.5 million, I think, in price.
Interesting you should say that, because that's obviously a little bit more measured than some market watchers. Okay, so time for some short, listicle type videos, if you could. If I were to ask you, what would be the 3 best places to invest your money in the next, say, 10 years, how would you respond?
Gold, silver, and Bitcoin.
In that order?
Yeah, for different reasons.
And of all your 6 children, all of which I'm sure have a very long future ahead of them, what are the 3 jobs you would urge them to do, to participate in this exciting new time in the next, say, 10 years?
I urge them to do what they want to do, because we don't have much time on this planet. Do what you're naturally good at, and they're not naturally good at what I'm naturally good at, by the way. Be creative. My second eldest is a ballerina. It's fantastic. You only have to do that once for a very few years, and your whole life really has some meaning, and the rest is cruisy. So I encourage them to be creative, to paint, to draw, listen to music, which I love, to play guitar, play drums, whatever it is, and you'll work out what you're good at, and that's kind of where you earn your money, which is a different concept. If they both coincide, it's awesome.
And the 3 skills you would urge them to acquire to participate or to compete in the future?
The biggest skill I really had to taught myself is patience. As I progressed from being a market maker, where I would be trading literally every second with other banks in amounts not less than $5 million. So I had a very short window of concentration. I had to change my mind continually, but I was lucky that at the end of my time zone, I handed it on to New York, as I had picked it up from Tokyo, so I didn't really have to think about it after that. But when you're thinking about investing, for example, I think it was Charlie Munger that said, patience is your greatest virtue. And in fact, he said that the best way to make money is to do nothing for a long time. And that's exactly right. Because when you have the best idea and it's going your way, you so want to tinker with it. And it's so the worst thing to do.
Yeah, but Charlie Munger expired. He checked out at the grand old age of 100. I'm not sure many people will get to 100. And I think it was also Anthony Scaramucci who said that the best strategy to deploy when it comes to Bitcoin is to behave like a dead person. Just do not do anything and just sit tight and just watch it do its thing. I think you and I are roughly the same vintage, right? So if you were to be advising someone, say the 6th decade, and trying to position themselves for this really crazy world for the next, say, 10, 20 years, while they're still of workable age and sound of mind and a reasonable amount of fitness left, how would you advise them to allocate their resources?
So in terms of money, you have to have some gold, because the next 5 years will probably see the most dramatic change in economies that's ever happened. But the way forward is great once we go through that. Allocate time to your children and to the things that you love doing and to the things that bring other people happiness. I'd love if I could actually manage to achieve all of those myself simultaneously.
Okay, one last question for you, and it's really in reference to your reply a couple of minutes ago. What do you mean by the biggest material change in the world in the next 5 years? What do you mean by that?
So America is insolvent in that they're not paying some of their pension obligations to government workers. So they are insolvent. Japan is and has been insolvent for a significant amount of time. Japan is the largest holder of US Treasuries. US Treasuries are the underpinning of the world financial system. They are the risk-free security, now with a worse credit rating than Microsoft. So as ever, if someone or some things, eggs are all in one basket, it's just asking for disaster. And almost every single transaction that happens in the world involves US Treasuries, even when you put money in your bank account. So as the value of US Treasuries becomes less creditworthy, then there's going to be a huge change, because the dollar will lose its reserve currency status. And it's, as we see already, it's creating geopolitical change. And on the top of that, we have a new world of cryptocurrency, money of the internet. So why would we have countries and tax systems when we can just have one money of the internet? I mean, it seems so obvious, and how we get there is obviously very complicated. But I think that will absolutely happen in the next 5 years. And since 2008, I've been watching all my peers tell the world that a big smash up is about to happen. And I've waited till now to actually say that myself. And last week, 20-year auctions of Japanese government bonds, the auction failed. No one wanted them. 20-year auction of US Treasury bonds failed because no one wanted them. We're about to see the biggest change in money in 5,000 years. And unfortunately, that involves geopolitics. As you know, students of history around what happened between World War I and World War II knows that having money and not having money creates lots of geopolitical changes and tensions and wars and all that sort of stuff. So I think that it's long overdue and it's going to happen, but we will come out much better and much nicer.
I hate to sound a bit melodramatic. Do you think it goes the way of 1914 and 1939 though?
Well, if you look at look at history, you'll say, well, as soon as you have escalations geopolitically, small wars break out which wouldn't have done otherwise, simply because it's less of a war than the other war. And we're already seeing this with India and Pakistan, for example. If you put another country in abject poverty because they lost a war, then it's very likely that that country will do something about it, i.e. Germany. So where are we going with Middle East, Ukraine, Europe? You know, there's lots of things in there that say this could be a real mess. And if you look at the history of how empires end, like if you read The Decline and Fall of the Roman Empire by Gibbon, it's a long read, but it's exactly what's happening to the US empire now. And for the Romans, quantitative easing was slicing off bits of silver off coins and then counterfeiting coins and then desperately trying to support the system till everything explodes. And you just have to say that everything's arriving at the same time now. So let's get it over and done with and move forward to a nicer, better world.
Yeah. That said though, all good movies have a happy ending, right? So where's the happy ending here?
Well, if you're a Bitcoiner, I don't know whether you are or not, but you like to think, actually I'm convincing myself I am there, that Bitcoin brings freedom and equality, which it kind of does, because the world that I grew up in as two currencies being traded against each other doesn't exist. So everyone aligns around the same good thing. So I think that it can have lots of real positives if people adopt all the great things about it and don't view it as a currency or money. It's just what it is. It is the lubricant of how transaction happens.
Thank you for that nice summation and that happy ending. I hope more people start to look at that, whatever you want to call it, whether it's an asset or currency or commodity, at least in a more positive way. So thank you. Thank you, Ian, and good luck with your business in the future. Thank you.
My pleasure. Thank you for having me.
All right, cheers.